So I ran out of coffee this morning, no double espresso today. So what's the next best thing for me? I decided to go to Starbucks. I'm driving, it's 8 a.m., there's a bunch of traffic, everyone's going to work. I didn't feel like getting out of the car, so I said, screw this, we're going down the street, we're gonna try Dutch Bros, drive all the way down the street. And when I get to Dutch Bros, they literally had twice the amount of people in line versus Starbucks. Exactly how this picture looked like. Double lane drive through. There was about 30 cars in the drive-through lane at Dutch Bros. You had two workers running around with their little iPads, but I've never seen so many people buying Dutch Bros, and that's why we're gonna check it out today. Dutch Bros stock, BROS, $64, currently at a $10 billion valuation. Year to date, it's been pretty flat. Beginning of this year was at 56, up about 14%, just up and down. But from September of 2024, looks like it's up about 100%. So it looks like this coffee chain is making some money. Quarter two earnings was just released. Let's go ahead and check out some of these fundamentals. So on the latest top line, they posted 416 million versus 325 million from the previous quarter. Top line revenue is up about 28% year over year, 8 consecutive quarters of top line growth. These are some crazy numbers. Some of the best companies out there are growing 25 to 50%. Check out earnings per share. Currently posting 6 consecutive quarters of earnings per share growth. The latest they posted 0.20 cents versus 12. That is up 66% year over year. And you can kind of see in the September quarter of 2024, they jumped 250% on the earnings. That is why when you take a look at the stock from the September quarter, up about 100%. So income statement is looking good. Top line revenue is growing year over year. Earnings per share is growing year over year. Profit margins are at an all-time high, sitting at about 28-29% profit margins. Huge improvements in the profit margins. Go to this left box right here, the amount of shops they opened from quarter two of 2024. Looks like they opened from 912 total shops to 1,043. That is up 14% year over year. That's a blend of company-owned shops and franchise-owned shops. Next up, onto net income. They posted 25.6 million versus 11.9. That is up 115% in net income year over year. 6 consecutive quarters of net income growth. In those 6 consecutive quarters, they've grown net income in the triple digits. Once again, if you go up here, this is the September quarter. The September quarter, they saw net income grow 357% year over year. So when you see net income like this grow in the triple digits while the stock price has stayed flat or done nothing, that's when you know it's time to buy. September was the perfect time to buy this stock. Improvements in net income, cash flows, total revenue, earnings per share, and the stock is up 100%. Lastly, statement of cash flows. Look at these numbers. They posted 28 cents on free cash flow per share versus negative 5 cents. They are almost consistently posting positive earnings per share every quarter. On the latest one, they posted 28 cents. Latest one, they posted 28 cents versus negative 5 cents from a year ago. That is up 660%. 660%. I don't know if you guys have noticed the trend in my videos. I don't like researching large cap companies. I look for companies with like a market cap below $15 billion. They're the ones that move quicker. When you compare Starbucks to Dutch Bros, Starbucks is a $92 billion company. Dutch Bros is a $10.6 billion company. And as you could see, the difference in the growth in the past year, Starbucks is down 18% versus Dutch Bros up 90%. Let's just take a look at the 5-year trend. I mean, look at Starbucks in the past 5 years. Just flat. It's harder for a bigger company to grow versus a smaller company. So we like researching smaller companies. Starbucks is worth 10 times the amount of Dutch Bros is worth. So Dutch Bros has more room to grow. And as you can see in the past 5 years, up about 50%. I mean, it only IPO'd in 2021. So from the bottom of 2023, you would have been up about 173%. So anyways, this is the quick quarterly fundamentals for Dutch Bros. As you can see, lots of green. We like seeing lots of green. But everything has been improving. Earnings per share has been improving. Total revenue has been improving. Profit margins, free cash flow, and net income. So I don't believe this run-up is done yet. A $10 billion valuation is still pretty cheap in my opinion if they could keep growing the amount of stores and keep people addicted to their coffee. So in the remaining of 2025, they still plan to open another 160 shops by the end of 2025. In quarter two alone, they opened 31 new stores. And by 2029, they expect to have a total of 2,029 shops. In about 3 to 4 years, they plan on pretty much doubling the amount of stores that they have. That is some huge growth rates for Dutch Bros. If you look at the latest transcript, Dutch Bros is in growth mode and we are just getting started with a long-term addressable market of 7,000 shops nationwide and just north of 1,000 shops today. They are coming for Starbucks. They are coming for Starbucks. A lot of people don't like Starbucks anymore, by the way. So by 2029, they want 2029 shops. And long term, they want 7,000 shops nationwide. This thing has so much room to grow. They only have 1,000 shops total. That's going to be 7x. Onto the balance sheet real quick. Let's see their cash. $255 million in cash. $193 million in long-term debt. Let's see if they're paying any interest expenses. Annually, they're paying about $27 million in interest expenses. So they don't have any liquidity issues. As of June 30th, they have $694 million in total liquidity. $254 million of that is in cash. So that's what you'll see right here, $255 million in cash. The rest, $440 million, is set on the side as a revolver just in case. So it's looking pretty good for Dutch Bros for the next couple years. So I made a previous video on this, and actually if you want to check it out first, I'm still pretty bullish on Dutch Bros. I mean, just seeing what I saw today with the amount of cars in the drive-through line versus Starbucks, they have a long pathway ahead. Institutional ownership is at an all-time high. We like seeing increasing institutional ownership. So they don't have a large float, 122 million in float, a ton of analyst upgrades, pretty much from August of 2024, non-stop analyst upgrades. There's one downgrade by Piper Sandler to neutral, but other than that, all of these price targets are above $70, so way above the price it's selling at today. Not financial advice. If you're thinking of investing in a coffee company, I do recommend investing in Dutch Bros versus Starbucks. They are the underdog right now, but they also have more room to grow. Starbucks is a huge company. Remember, Starbucks is at about $100 billion market cap. Dutch Bros is only sitting at $10 billion. Starbucks is still 10x the amount of what Dutch Bros is worth. So this company has way more room to grow. Remember guys, small companies make big moves, big companies make small moves. Smaller companies are a little bit more riskier, fluctuate more, but it can make you more money. Anyways, just a quick rundown guys of Dutch Bros. Great fundamentals, increasing institutional ownership, lots of analyst upgrades. So it's looking good for now. Thanks for watching this video. Don't forget to like, subscribe, and we'll see you on the next one. So we ended up just going to a gas station. I got my Celsius this morning.
What?